Buy-to-let businesses or limited companies have now become the biggest type of company as listed on the UK Companies House list, according to data from Hamptons. Listen up. Hi, this is Charles Kelly, Money Tips. Yes, buy-to-let business is now the biggest single type of business, bigger than, say, fast food, for instance, due to a record rise in the number of people putting properties into limited companies. 4 times as many buy-to-let limited companies than, say, fast food, for instance. And more companies are being now listed in Companies House, probably up to 70 to 100,000 each year in terms of properties going into limited companies. And that's 400,000 now, limited companies holding buy-to-let businesses or properties within those limited companies. Now, interestingly, that is up from just 92,000 in 2016, and 680,000 buy-to-let properties are now within buy-to-let company structures. I wonder why that is. What happened around 2016? George Osbourne, right? Section 24. George Osbourne brought in this vicious tax change, this grab from landlords. At the same time, they were increasing stamp duty for second properties. Yes, thank you, George Osbourne, from a Conservative government who brought this in and has now sort of turned the whole market upside down. Because if your properties are in your own sole name, you can no longer claim the tax back on the interest that you pay to your lender in the way that every other business can do. So I talk to a lot of people that have got properties in their own name, and due to the fact that they are now higher rate taxpayers, they're now having to subsidise the mortgage on the buy-to-let, despite the fact that rentally it's making a profit. Because of the higher tax, they're having to subsidise this out of their own pocket. Now, look, we know that a lot of these companies are not necessarily buy-to-let. There might be people putting up limited companies, or otherwise called special purpose vehicles, SPVs, to buy properties within those companies and then refurbish them, sell them on, or refurbish them and turn them into smaller units like flats, for instance, or HMOs, and keep them. So there's lots of different reasons. They're not all necessarily buy-to-let businesses. Now, we know that a lot of smaller landlords have quit the market due to this tax, George Osborne's tax, and due to the Labour policies on renters' rights bill that's coming through this year. That will give tenants much more powers, and I've talked about that in previous videos. But at the same time, more people are moving properties or buying properties within limited companies. It's become the standard way of buying a property in the UK. What surprises me is that a lot of the standard high street lenders still haven't grasped this market yet. They're still not into it, or they're very cautious about lending to limited companies. Now, when you lend to a limited company, the owner of that company is still standing as guarantor anyway, so they're still signing a personal guarantee. So it's pretty much the same as lending to a person, except that your property is now within a limited company. Now, limited companies give you other advantages. It means it's a good vehicle to use for legacy purposes, for passing on properties to your children or grandchildren, because you can give them shares in that limited company. There are many other reasons. Now, I've talked about this on videos before about the Section 24 tax, and some people feel that they're stuck with their properties in their own name, and that if they effectively move or sell those properties to a limited company, they're going to be clobbered with more tax. But there is a way around it, and I've talked about this in other videos. It can be done through a series of steps, through an LLP, then a limited company, but it's got to be done carefully, and you've got to qualify along those steps in order not to be seized on by the HMRC, the tax people, and maybe that scheme might be unwound or not allowed. So if you do it properly, if you do it legally and properly with the right advice, then it is possible to move your properties into a limited company and then enjoy the tax benefits within those companies. I would say if you've just got one buy-to-let, is it worth it? Probably not. If you're a basic rate taxpayer and your income is not going into higher rates of tax and you've got 1 or 2 buy-to-let properties, then probably they're better off where they are, because there's quite a few steps to take and there's fees involved and that sort of thing. But if you're planning to go from that 1 or 2 properties and buy more, acquire more properties, then the limited company route would make sense for you. And I don't know, some people don't like the tax structure of a limited company. I find it easier because you've got this entity there, it's over there, and it's away from your own personal tax, so you just have to deal with the tax within that property. So look, if you're interested and you want to find out more about this, drop me a line at charles@charleskelly.net. I'll put something in the notes there. You can watch previous videos. I'll put a link up to that which explains this in more detail. But just drop me a line and we'll introduce you to a firm of accountants that have vast experience in this market and can help you move your properties into limited companies. Now, many of you have got accountants, right? So you say, well, my accountant hasn't said anything about this. Why is that? Or my accountant said, oh, I don't know if that's a good idea. Oh no, HMRC don't like that. All these things that accountants come up with, they're basically excuses, because either they don't know, or they're too lazy to just do the job, or they're just trying to be cautious and get on with doing your books. A lot of accountants, unfortunately, are just glorified bookkeepers. They might be chartered or they might be certified, but they're just glorified bookkeepers. They're just processing your information. At the end of the year, they say to you, here is your tax bill, pay £10,000 or whatever. And I don't like that, because they're not being proactive. And I've had accountants like this before. They're never proactive. They never say, well, did you realise that if you do this and this, or you could claim that, you could pay less tax? They don't tell you that. You have to ask them the question, if I did this, would I get tax relief on that? They say, yes. But I think to myself, why didn't they tell me that before? So I wouldn't necessarily be put off by people, especially down the pub, or an accountant says, oh, I don't know about that. I would take advice, get free advice from somewhere, and then make your decision. You can perhaps still keep your bookkeeper. You don't have to move everything over to the accountant that's doing your property transfers. But at least take advice, at least keep an open mind on things. So if you're interested, drop me a line, charles@charleskelly.net. And I will take you through the steps, or the accountants will take you through the steps and how you can move your properties from your own name into a limited company, with the steps along the way, and how you can then save on tax and start claiming tax relief on your limited company, and also how you can perhaps improve things for yourself for inheritance tax purposes and passing on a legacy to your loved ones, because I'm sure you would rather they have the money than the tax man, right? So thanks very much for listening, and I'll see you on the next episode.